This week on Money Unleashed, we want to dive into the sector of consumer discretionary. So consumer discretionary is a funny word. If I bring up that term, that's not something we necessarily use in everyday sort of common speak. But consumer discretionary is something that we're all very familiar with. Consumer discretionary sector fluctuates with business in a general economic condition. So as business gets good, we start buying more of this. And as business is perceived to be tough, we start buying less. These are companies like GM and Amazon. These are things like hotels with Hilton, Nike, right? So we're not going to buy a lot of shoes if we're worried about the economy. We're not going to travel to a hotel if we're worried about the economy. But if we feel good, if we feel positive, if we see the market going up, we may get out into these stocks. So the consumer discretionary sector makes up about 10.2% of the S&P 500, and it's going to be those stocks that we dive into when we get really excited about what's going on in the economy around us. We also are going to see things like automobiles in this sector. So when you're looking at a sector that may have some growth in the positive side of the economic cycle, so we talked about that before, right? That economic expansion in the economic cycle. When we think it's going to expand, when we get excited, these are the sectors you want to start looking at, things like Nike and things like Hilton.